All right, in the previous videos, we've looked at how to enter income and expenses through the register, and then we just covered in the last video how to enter contributions and create deposit batches. So now what we're going to do is take a look at how to create a payable. So if I'm going to go over here to Fund Accounting, Transactions, and Accounts Payable. Accounts payable and receivable are two screens that work almost identically. Accounts payable is to record money that you owe but have not paid yet. And accounts receivable is to record money that is owed to you, but you have not received yet. So again, the flow is generally the same. What it is it's kind of a holding spot for money that is either expected to be paid or expected to be received. So we're going to look at an example here of accounts payable, which is money that you, again, owe, but haven't paid yet. So the most common example of when to use this is when you are going to enter a bill that you've received and you are choosing not to pay it until a future date for some reason. You want to hold on the bill for payment for, certain requirements, or you just want to float the cash as long as you can. Whatever the decision is, that's what accounts payable can help with. Two things I want to preface here is one, if you are just going to turn around and cut a check for this bill, there's really no point to entering it through accounts payable. If you are simply getting bills in the mail and then turning around and paying them, then you can do that simply by entering a payment in the register, record the check number, record the expense account, and you're done. That will then add to your register, and then when that check clears, it'll be a part of your bank reconciliation. It's done. So really the only time that you're going to do this is if you're going to enter a bill in one period and then pay it in another, in 1 month or paid in another, or in one fiscal year and paid in a different fiscal year. So let's run with that example of a month over month type of bill. So let's say that I have a vendor here, and this is going to say, I'm going to say this is Mark's Plumbing. Mark is not a contact yet, so I'm going to add him as a vendor. I'm going to say this is for plumbing work on the property. The bill date, let's say that the bill came in on Wednesday the 29th, and it was due in 30 days, so it's due on the 28th, and it was for $500. Okay, so the details that I'm entering here are kind of related to the invoice. So most likely the invoice would have some sort of invoice number that you put in there, and then some sort of memo as to what it was for, the vendor, the bill date, the due date term, and then the amount. So these are generally going to be found on the invoice itself. Down here is where you're then saying, okay, this was for whatever. So I'm going to go down here and say this was for an expense account for, my expense accounts are up here. I'm going to say there we go, grounds and maintenance one. That's going to come out of my capital campaign. I can add in some sort of comment. And again, I can split this as many ways as I want. So if this 500 is split across multiple expense accounts or funds or tags, I can do that. Otherwise, I just leave it like this, and I'm going to say that's 100% of the bill, and then submit. So what that does is now I have a kind of snapshot up at the top to say I have $500 owed, and if I scroll down, there's a Pay Bills section where I can now choose what account I'm paying this out of, and then I can choose when I'm paying this bill. So let's say I paid all 500 of it let's just say I'm paying it today, right, 2/6, and then Pay Bills. So again, what this is doing is it's creating two separate entries. There is first the entry of the accounts payable, and then second, there is the payment of accounts payable. By doing this, I am saying there is an invoice accrued in January. I was invoiced, there was an expense account, there is a bill that I owe as of the end of January. So then that will then show up on my January income statement if I'm running it on the accrual basis, even though the cash left in February when I paid the bill. So again, that's kind of the point of accounts payable, is to properly accrue things into the right period to show that I have expenses that I owe accrued in one period, even though the cash is going to be paid out in a later period. And then whatever account that you chose here to pay the bills, you can then go to that register, and you'll see there's that bill or invoice payment for Mark's Plumbing coming out of my accounts payable account, because that's where I put it when I first recorded the bill, and a payment for $500. So it has now decreased my capital campaign by that $500.